All right, hey everybody, it's James, Broker Century 21 Alton Clark. I have a special treat for you guys, Mr. Marc Bernstein, Brokers Insurance. Reason being, and by the way, known Mark and the Bernstein family for a very long time. Has a fantastic insurance company here, Central Florida, Brokers Insurance. Mark, where can they find you guys, by the way?
Our website is orlandobrokersinsurance.com. Our phone number is 407-862-6464. So if you go on the website, it has links to our email address on how to reach us, our hours of operation, our phone number, and everything. We're a full service agency that has been serving Central Florida for 20 years. And this is what we're about to talk about is definitely a change from the way it used to be.
Yeah.
So,
to say the least. Right, to say the least, the change has been pretty drastic. Real quick, because we may have clients watching this, we may have new agents watching this. How does the process work on your guys' end of things, and how do you guys function, let's say, in your broker capacity? So buyer A is looking to buy a house. Who typically reaches out to you? Is it the buyer? Is it the lender? Is it a combination? And how does that initial process work?
It was a combination. A lot of times the person buying that property will reach out to us, and a lot of times their lender will reach out to us for a quote. The way it worked probably until about 2019 was we got a name, an address, and a closing date, and we're able to give you a quote pretty easily with multiple different companies at a pretty good rate. Maybe some inspections were needed depending on the age of the home. Nowadays, there's so much more that goes into it. So when we get contacted, 9 times out of 10, we need dates of birth. We need to know if the person's ever had claims before in any homes they've owned or lived in. We need to know if they have any animals, and then we usually need inspections up front just to do all the work. So, older roofs, older electrical boxes, different type of plumbing, how old the AC unit is. Those are all pinpoints that the carriers look at. And on top of all of those things, a lot of them want to get a report from a licensed roofer or a licensed contractor or inspector talking about how long the roof has left of life, what condition the roof is in, and if there's anything that potentially would look like a hazard to an insurance company. So the upfront underwriting required in writing properties now has definitely changed drastically from what it was. And then, on top of that, you put in how bad our market is. The capacity for most carriers is so small. When we get a house, it used to be you get 25 quotes, 25 different companies, they're all pretty good. Now, if we get one quote that's not Citizens, we're luckier the house is brand new. So
wow, not bad. Say that again for me, Mark. Say that again. People need to hear that.
We used to have 15, 20 options for every house, pretty standard. Now, unless the house was built in the last 2 years, we'll be lucky to have an option that's not Citizens, especially Solo County. So Solo County is kind of insulated. The rest of the state is not nearly as bad as Solo County. That's kind of been the height of the fraud that has destroyed our industry. So if you have a house outside of Solo County, a lot of carriers have different guidelines on what they'll accept. But inside Solo County, anything that's built prior to 2000 is going to be a problem. I say a problem. It's going to end up most likely going to Citizens, which is not the way this insurance market was designed, and not what Citizens is supposed to be for. So
yeah, that's obviously, that's obviously brings a lot of concerns, obviously, that, one company is potentially going to be cornering the market, so to speak. I see all kinds of issues coming up. Let me ask you, and we're going to get into what a lot of these changes are and why, so people are prepared, but kind of something you said prompted me, claims. So one of the big things we're running into now is people that have roofs. There was a lot of storm damage. People got re-roofed and stuff like that. What potential impact could people that have prior claims have on their ability to get future coverage?
So a lot of carriers will do one prior claim. If you have more than one prior claim, it makes you ineligible for a lot of the places that you could typically go. But a lot of these carriers now go one step further. So they run an insurance score on the individual, but they also do a look back on the actual property that you're trying to insure. So we've had times where the clients have never had a claim in their life, But the house that they're buying, the prior owners filed multiple claims on that property. Insurance company says we don't want it.
Really?
So,
holy hell.
And yeah, what you said earlier about one carrier taking up so much market share with Citizens, there's a whole other set of problems that go with that too. Because Citizens is the insurance of last resort, the state-run product. And they're the only company in the state that's not required to carry enough reinsurance for what they have. These numbers I'm about to tell you are a little bit old. The new numbers aren't out, but as of a couple of months ago, Citizens had about 11 billion in reserves, which sounds like a lot of money. They have about 350 billion in liabilities, and they had about 23% of their insurance covered. So what that means is, if Hurricane Ian would have hit Tri-County instead of the west part of the state, because Tri-County has been saturated with Citizens for 10 years. Now Sola County is becoming kind of like Tri-County. But Tri-County—
Can you explain the county breakdown, Tri-County? So can you explain that real quick for people that don't?
So Tri-County is Miami-Dade, Broward, and Palm Beach County down south.
Okay.
Sola counties are Seminole, Lake, Orange, and Osceola counties in central Florida.
Okay.
When they get names for groups of counties, it's usually a problem. So, 5 years ago, Sola County, that word didn't exist, and it's here now. But if Hurricane Ian would have hit Tri-County, where that Citizens has the most exposure, what would have happened is they would have run out of money virtually overnight.
Wow.
Their reinsurance would have covered about 25% of the losses.
Oh.
And then the rest of that would have been paid by assessments to other people who have Citizens throughout the state. So a lot of people over the last 2 years have gone to Citizens not because they have to, because it's cheaper than anything in the private market. Well, it might be cheaper now, but if you get hit with assessments, this is how the assessments work. Citizens needs to do an assessment. Every one of their policyholders will get an assessment that could be up to 40% of their annual premium.
Ooh.
You have 30 days to pay that back. So some of these premiums are like 15, 20 grand a year. So imagine getting assessed 40% of that after having a storm wreck your house. So there's actually a scenario where there could be a hurricane that damaged your house, and before you got a penny from the insurance company, you got assessed first.
Oof.
So you'd have to pay the insurance company first before you get your money. The second part of that is, if the assessment, the 40% is not enough, then they can assess the rest of the people in the state 2% of their policy premium if you're in the private market. And if that's not enough, they can put a 3-year tail on a Citizens assessment of 30%. So if you get hit with that 3-year tail, even if you leave Citizens, you're required by law to pay those 3 years of a 30% assessment, regardless of if you keep them as a carrier or not.
Wow.
And a lot of people don't realize that they're up for that. And, the other thing is, imagine having a hurricane hit Tri-County, it would knock Citizens into doing these assessments. You being somewhere in the Panhandle, hundreds of miles away, not affected by the storm, you get a bill in your mail for 40% of your premium because Citizens ran out of money.
Wow.
And they don't buy the reinsurance that's necessary because it is not conducive to the state to pay for that. They'd rather just take the risk. So there's a lot of people that believe the state is sitting on a bunch of extra funds, and if that happened, they would take funds from there and put it into Citizens. But technically, if you read the policy that Citizens has, they can assess if they run out of money at any point.
Wow.
The last number that I heard is that Citizens is up to 1.3 million policies. The projection is by the end of 2023, they'll be at 2 million. We have a healthy insurance market when Citizens has about 400,000 policies. So that's how far off.
400,000?
400,000 is a healthy Citizens market.
And we're going to be at 2 million. Damn.
And now the other part of that too is, a lot of people don't realize that starting in 2024, there's going to be flood requirements if you have a Citizens policy, because basically what they're doing now is they're trying to deter people from going to Citizens and take any other option you have. Even if it's more money, they want to deter them with the possibility of assessments. They want to deter them with flood insurance, and they also want to deter them with all these inspections that are required and condition of the home being so strict that people just say, forget it, I'll go to an excess carrier and pay a little bit more money and not deal with Citizens. So unfortunately, that's kind of where we're at on that. But, I can get into the why in a little bit. I think you have some stuff you wanted to go over with that. So I'll kind of let you control this.
Yeah.
Whenever you want me to.
So real quick, can you just briefly talk about who is Citizens?
Citizens is a state-run option of last resort. In a perfect insurance market, you're only going to Citizens if no one else will take you, which typically means you have multiple claims, or you have a house that's in a bad area, or you have a 25-year-old roof or something else. Citizens used to be, if no one else will offer you a policy, they will do it for you. Now Citizens has become, unfortunately, the go-to because they're the only one with capacity, and usually their rates are cheaper than what you can get on the private market. So
yeah, I'm hearing that a lot. I'm hearing that a lot, particularly from a lot of the retirees and the people that are like on a fixed budget that are trying to control expenses. And a lot of people got in their mailbox, they got their policies doubled, and they immediately started searching and landed on Citizens, quite obviously.
Which really is cheaper for now until they get those assessments.
Yeah, I mean, that's news to me. I didn't know that. You just dropped the bomb on me. That's crazy to hear that they could be getting hit with that. What can you tell me about how the industry has been impacted by the recent storms and changes? I was just in 2 weekends ago for the holiday weekend. I was in Captiva, which is like one of our favorite places. And obviously the place took a direct hit. And Mark, it looks like all they did was turn the power back on and then walked away. Like that whole region is, the debris is everywhere. There's houses in the water. Like nothing has really happened. And it kind of like, you know, we've obviously been seeing a lot of the changes that have happened to insurance and everything else. But like from your perspective, was it that those storms that really started it? Did it kind of start beforehand? Like how did we land where we are today?
So it's kind of interesting. We as a state and the insurance, we were totally prepared for the hurricanes. If we didn't have the other mess that's happened, these hurricanes would be nothing for the state's insurance industry to handle. But what's happened over the last couple of years is the amount of roof claims that were actual, wear and tear on roofs and weren't damaged by covered perils that the insurance company had to pay for. The abusive amount of litigation, most of it fraudulent. Just to give you an idea, in 2022, the state of Florida had 130,000 lawsuits filed against home insurance companies in the state. The rest of the country combined had about 20,000.
Oh my!
So if that doesn't scream fraud, I don't know what does.
Oh my!
On top of which, over 75% of what insurance companies have paid out in the last 15 years has gone to the attorneys and not to the actual homeowners. Over 75%, which is just such a, and then, the worst part is a lot of these attorneys hide behind they're doing it for the little guy. No, you're not. You're leeching onto people's policies. You're suing. When you sue an insurance company, to get future insurance becomes basically impossible. And you're getting the homeowner maybe $15,000, $20,000 for a roof. Meanwhile, your attorney's fees that you're not telling them about are $200,000, $300,000, $400,000 for that claim. So you have a total incentive to get insurance, to get a client to sue. And how do you do that? Well, they became in cahoots with the roofers, which, to take it even a step further, some of our local roofing companies now are actually owned by those very attorneys, but you just don't know it because they hide behind Delaware companies managed by a Nevada company, managed by a Florida company. Those two states don't disclose anything to the public about who owns companies, so they're able to own it without having a conflict of interest.
Wow. And
what they do is you get a door knocker on your door. Hey, you got damage on your roof. Can I hop up on your roof and take a look at it? Sure, no problem. Okay, well, sign here giving me permission to hop up on your roof. When they do that, what you're actually signing is an assignment of benefits, which the new legislation, which we'll get into in a little bit, is going to make that illegal now. But back in, as recently as last year, they would get them to sign that assignment of benefits. They would hop up on the roof, do an inspection, not tell the homeowner anything, and leave. There was a law passed several years ago with assignment of benefits that said a client could cancel it in the first 14 days. So what these roofers are doing now is a knock on your door. They get you to convince them to do an inspection. You sign a piece of paper. You don't realize you just signed an AOB. You don't hear from them. They don't tell you what's going on with your roof. They just leave. 14 days later, they file a lawsuit against your insurance company. Now it's past the amount of time where you can get out of that AOB. And they send a demand with that lawsuit, basically saying for that $20,000 roof, we want $85,000. So then the insurance company can decide, do we pay the ridiculous $85,000, which means they just made 4 times what the roof costs, or do we fight it in court and potentially we win, but even if we win, we have to pay our attorney's fees, or if we lose, we're going to be paying for that roof at whatever amount of money they want to charge us for, plus hundreds of thousands of dollars in attorney's fees. So basically what it does is it pins these insurance companies into a corner to make a decision of what's the worst possible decision we can make.
By the way, it's catastrophic. I mean, those fees, it doesn't matter which way you go, either paying your own attorney's fees or the exacerbated amounts that either way, there's neither of those options are good.
None of those options are good, and the insurance companies are screwed, and the homeowners a lot of times don't even know it. So we've had people who get non-renewed for exposure management. We go to re-quote them and they said, we've never had a claim, and we go quote them somewhere else and they have an open claim with litigation, and we tell them and it's news to them. And they're like, what do you mean I have an open claim with litigation?
Wow.
I never filed a claim. I didn't do anything. And then they find out that roofer that knocked on their door to do an inspection made them sign an assignment of benefits and then sue their insurance company without them even doing it. So yeah, the fraud has been absolutely rampant. They've replaced more roofs in the last 5 years in the state of Florida than the entire time since insurance has been a thing here. Our storms haven't gotten more severe. The weather hasn't gotten worse. These roofs are supposed to last, 20 years. Now you have to replace them every 10 years to get insurance, because basically what it boils down to is a roof that's 15 years old in the state of Florida that's had multiple summers of heavy rain and wind. The difference between that roof and a brand new roof that's been actually damaged by hail is virtually indetectable to the eye. So any roof that's over the age of 10 years, you can almost guarantee that these roofers will be able to get an insurance claim paid based on the old laws. Now there's new laws which basically say, and part of it just got passed in March of this year, it goes into effect later this summer, but now assignment of benefits are completely illegal. You can't do it, which are great. Now on lawsuits, the conversation is going to have to shift, and the attorneys are going to have to say to the homeowner, yeah, your insurance company denied your roof claim, and we can sue them, but if we lose, you're going to have to pay their attorney's fees now, which most homeowners will say, I'll just pay for my own roof. Thanks. So hopefully the fraud's going to come to an end, but basically what that's done is it has made every one of these carriers' loss ratios be double digits, triple digits, to the point where we've lost 14 carriers in the last 4 years to insolvency. Another big issue that has plagued the Florida market is after Hurricane Irma in 2016, we passed legislation that said you can file a hurricane claim up to 3 years after the storm. So basically, any single one of these door knockers convinced people that they had hurricane damage from Hurricane Irma up to 3 years. And the result of that was the reinsurance markets that protect these carriers from big storms. So basically, the reinsurance is a book of business. Let's call it State Farm, for instance. They'll have, let's say, $500 billion in liabilities. They'll get a reinsurance tower that covers them up to the $500 billion in liabilities. So if a massive storm comes through and hits, they'll have to pay usually it's like a 10 or 15 or $20 million retainer, and the reinsurance will pick up the rest so they don't lose their shirts like they did in 2004 and 5 when they didn't have reinsurance. So those reinsurance companies after Hurricane Irma in 2016 said, well, wait a minute, Florida, you're a litigation nightmare. We don't want to be here. And half of the reinsurance companies said we're done offering business in Florida. The rest of them not only had to continue to operate where they were, but had to pick up the rest of that business. And it drove rates up about 75% on the reinsurance over the last couple of years. These carriers do not have enough money to pay that and continue to expand capacity, because your reinsurance is based on how much business you have in the state. So what a lot of these carriers are having to do is, in order to pay for their reinsurance to stay in compliance with the state laws, they are lowering their capacity, which is why you see a lot of exposure management rules with these carriers. And the reinsurance companies are like, until you fix the legislative issues on the litigation side, we're not coming back to the market. And each year, more and more of those reinsurance carriers are really making it tougher and tougher for these companies to place business. So around April of this year, all of these carriers, as they're getting ready for their reinsurance, stopped writing new business. we can't extend our capacity. We need to get reinsurance for what we have on the books. Maybe when we buy our reinsurance, we'll have a little bit extra capacity there that we can open up in a minor way, but a lot of times no. And so you put all those factors together, you put the fact that 14 companies have gone out of business, and you've got a mess on your hands of where this business goes, and hence why Citizens has grown like wildfire over the last 2 years.
Yeah, huge problems. I mean, I see just really huge problems with this, obviously. So let's get into something more along the lines of, what does it take now? What does it take today? Like, someone's ringing the phone and they're looking to acquire a new policy. And let's talk about this in a way that kind of covers both buyers and sellers, because like one of the main reasons I wanted to talk to you today is so that people learn like in advance, like know these things to the extent that you can. You're not inspectors, you're not an insurance company. You know, I get that, but you should still avoid and know up to probably 90% of the things that should be able to impact you. You know, age of, the amount of useful life, a lot of these things are pretty easy to detect. And if you know a lot of these things up front, or at least you can take some preventative steps up front, it's going to save you a big heartache, as opposed to getting yourself tied up in a contract, expending, hundreds and maybe even thousands of dollars on inspections, depending upon the caliber of a home. So let's get into that. Let's first, buyers, be it first time home buyer, second, third, whatever. What should they be looking for? And understanding, like, when they call you guys or any company for that matter, and you kind of touched on it earlier, but like, what are some of the really big ticket things that they can know about and identify and probably potentially avoid?
So what I would say is, if you're a new buyer and you like a house and you're potentially thinking about putting an offer on the house, first of all, you're going to go look at it. Take a look at the condition of the AC. That's something that's very easy for anybody to go in and look at. See if that was maintained. Take a look at the roof and see if it looks like it's in good shape or not. I mean, obviously you're not inspectors, but you know what a decent roof looks like versus one that is in bad shape. Then the other thing they can do is they can go in county records and they can look at the last time a roof permit was pulled. So even if that person got a new roof, if they never pulled a permit, you're going to have a problem, and you're going to have to get that permit tied up. But if they do have a permit, you can see the last time that roof was replaced and know what the age of that roof is, to know if you're going to have qualification issues to get into a carrier. Then as far as the plumbing and the electrical boxes are usually pretty easy. They're usually, on the side of the house, sometimes in the garage. And you can go and look. If it's a Zinsco, if it's a Florida Pacific, those are going to need to be replaced in order to get insurance. And on those two boxes, for instance, if you see that there's also a chance that there's other wiring issues behind the walls. So that would be a red flag and something to look for. But if you go on there and you see that there's a roof permit 2 years ago, the AC looks good, the electrical boxes look good, chances are you're probably going to be okay on that home, but you won't know for sure until we run an insurance form on the client, a previous claim history on the home, and have usually a Citizens 4-point and a wind mitigation report. Because that's really when you'll know what the final rate is. And unfortunately for us, we used to be able to ballpark things pretty easily with an address. Now, all of those different things that we just talked about, the inspections, the insurance score for the clients, and the previous claim history on the home, has such a big factor on the rate that without all of that information, anything I give you is just a guess.
Yeah, understand
now,
that.
If you're a seller, those are things that you want to address before you list your house. Because to me, the ideal seller would be, my roof is new, my electrical box, my AC, my plumbing is all up to date, everything is good, here's proof. So when they come in, you can say, you're not going to have an insurance issue unless you personally have a bad insurance score or claim history. And, that's really all you can do from the outside. And as far as buyers go, we'll do quotes for anyone, free quotes. And, if they go through the process of getting a new home inspection, that inspector's already looking at everything that would go on a 4-point and everything that would go on a wind. So we always tell them, get those 2 extra reports. You don't want to send the whole inspection to your insurance company, because then they'll nitpick things like, oh, this outlet needs to be changed. And, minor stuff like that is going to be on a new home inspection. And with those reports and the client's information, we can tell pretty quickly what the eligibility is going to be and where the best rate will be. And, I do tell people a lot of times it used to be you could do a 5-day inspection period. I would try the best that you can to make that inspection period a little bit longer to make sure you have time to not only get the inspection report done, but they have to then go back to their house and put it all on paper and send you the forms. And then you have to get it over to an insurance agent to actually work. So you want to make sure you leave yourself enough days to make sure you're not going to have an insurance problem before the inspection period is up.
So what type of inspections are necessary at this point?
Unless the house is brand new, what I always recommend people getting is a Citizens 4-point and a window. The Citizens 4-point we can use with any carrier. It's the same information that's on a regular 4-point, it's just Citizens actual point. But if we end up having to go to Citizens, they only take their 4-point. And the wind mitigation is going to determine what kind of discount you get for what type of roof you have on your home, the condition of your roof, and how the roof is tied down to the truss. So those are really inexpensive reports. And if you're getting a new home inspection, those other two reports are typically either thrown in or very inexpensive because it's the same information. You're putting it on a separate thing.
Yeah, for sure. We're actually, one of the things I'm recommending to a lot of our sellers is to get those reports done in advance, particularly when there's gray area on how much useful life is left. Getting those reports done, and even if they're not a part of a general inspection, they're still pretty cheap. I think a 4-point's like $130. Wind mid, same thing. So it's not terrible. So
if you get them both, usually they'll package it together for like $150 for everything.
Yeah, and it's just to have the information in advance now, I think is huge, and that also is a little bit better information for you guys to be able to somewhat ballpark off of, knowing like concrete, like the amount of roof life that's left and things of that nature. Really quick, and I know this, but again, we have new agents and maybe even
real quick too. While we're on this, one thing I will tell you, and not that I recommend this for everyone because it is expensive and it takes a lot of time, but when we sold our last house, what I did ahead of time is I actually got a new home inspection, the whole thing. And I went through the 75-page report and I fixed every single thing on the report. So when I went to sell my house, they got a new home inspection and the inspector tells the people buying the house, this is the cleanest house I've ever inspected. Everything on this is tightened up because I did it ahead of time, which then gives that buyer that much more confidence in buying your house. There's going to be no negotiations on fixing anything up or potentially walking or them having leverage because you're going to back out of a contract and now you got to put it back on the market and explain why. Now, again, I'm not recommending that for everyone because it can be costly, but if you want to have your sellers have no issues whatsoever, get that new home inspection, fix everything on it, and then any buyer that comes in, you're going to have zero problems. So that's just something that we did, and again, like I said, depending on the house and depending on the situation, something to consider.
Yeah, no, we're strongly encouraging people to do it just because what we're trying to avoid is surprises at the 11th hour, buyers claiming they can't get insurance, trying to negotiate repairs in a 11th hour scenario, and next thing you know, it's really a hot mess. So that's absolutely something that we're doing. As a matter of fact, we're going to be interviewing an owner of an inspection company here shortly, and we're going to be sharing that. So that'll be something really good too for people to get a handle on. So let's talk really quick about age of life of systems. What are some of the minimum standards now? Let's start with roofing. Like what thresholds are in place now that everyone needs to know about?
Really, 10 years and newer for most carriers is what they want to see on shingle. Tile, some companies are the same as shingle on tile, but some companies will go longer on tile. And same with metal. As far as like the plumbing is not really an age issue. It's really as long as you don't have the polybutylene piping or pre-2006 PEX piping, you shouldn't have an issue on the pipes unless they're just in bad condition. And then as far as the electrical goes, again, that's not really an age thing. It's more of as long as you don't have something that's on the bad list. And then the HVAC, they want to see replaced in a certain amount of time. And then a new one that has come up the last couple of years is water heaters. A lot of companies want to see that water heater be less than 15 years old, because the amount of water claims that they've had over the last 10 years with water heaters has been really high. And that's a really easy fix. I mean, I think you can get a new water heater installed in your home for like $1,000, as opposed to having an issue and then not getting insurance because of it. And now you got to deal with that. You know, if your water heater is over 15 years old, just replace it before you list your house.
Yep. So HVAC, is there a particular number that you guys are looking at?
You know, it's really just, is it in good working condition? I would say it's kind of like a roof. They want to see 10 years or newer, because if you're over 10 years, which a lot of these HVACs work for well more than 10 years if you maintain them properly, but not everyone does. So the insurance companies are pretty wary on that. So if your AC unit's over 10 years old, that's something else that I would recommend replacing before selling your house, because you're just not going to have any issues versus potentially having some issues.
Yeah, for sure. And roofs, I really want to hammer this point home, because in my opinion, roofing is the central, it's one of the key components of this. It's a huge part of the reason why we're in this mess. It's kind of like 10 years now, right? I mean, that's what they're looking for.
They want to see something 10 years or newer. If it's over 10 years, they want to see that there's 5 years of life. I mean, Citizens used to do 3 years of life. Now they do 5 years of life on it. And that has to be a licensed inspector that says it. And even with that, most of these companies will go out after you bind a policy and do their own inspection. And a lot of times they'll come back and say, well, the inspector you used was not right. This roof doesn't have 5 years of life left on it or not. We're going to non-renew you at the first renewal unless you replace your roof. So
now, quick, before I lose my train of thought on that. So how can that be prevented? I mean, is there any, from an inspector standpoint, like, I mean, that's a pretty scary thing right there. You just said that if they hire the wrong person, is there anything that they can do to hedge their bet in that regard? I mean, because who you hire as an inspectors, I mean, there's a million of them.
So we've used 2 main inspectors the last 10 years, and we trust them unequivocally. But getting an inspector that's not going to lie to you to get a sale done, that's going to tell you the truth, is really important. And it's a lot of times as the buyer, it's hard to know the difference. But you really need to get an inspector that's going to give you an honest opinion of what that roof looks like. You know, I always tell people, you know, here's the inspectors we know do good work because we've seen it for 10 years. Here's their information. If you want to call them. And a lot of times they listen to us and do it. Generally, if you have a good inspector, you're not going to run into it, because a good inspector is going to tell you, hey, there's only a year or 2 left of life. There's a bunch of issues on this. But we get inspectors that say there's 5 years remaining on the roof. The carrier will go do the inspection. There's missing shingles, there's bubbling, clearly not 5 years of life left on that roof. And the inspector just did that report, probably got paid off by whoever the realtor was to make sure the deal goes through. And it ends up screwing the person who bought the house. So who you hire as an inspector is extremely important. You want to make sure that they know what they're doing, know what they're talking about, and are going to be brutally honest with you, especially if you're the person buying the home. Right? I mean, that's worth its weight in gold, whatever that inspector tells you, because once you own the home, it's your problem. So before you buy the house, you want to make sure that there's not going to be those surprises. And, you know, really, it's unavoidable unless you have inspectors that you know are going to do good work, and even if it hurts to hear it, tell you the truth on it. So
I hope everybody caught that. So if you pull permits and you see that you're near that 10-year mark, I think a huge emphasis needs to get placed on that inspector to be brutally honest, and you need to be prepared to do something about that. Either negotiate away that issue or walk away. But you, like, to run the risk of buying it and having the carrier do their own inspection and then, you know, hit you at renewal is, I mean, that could be catastrophic. Roofs now in Florida, 15, 20, 25. I mean, they're ridiculously expensive right now.
Yeah. I mean, the good news is, as the fraud in our industry goes away with the new legislation, I think that the price of roofs are going to start coming back to what they actually truly cost, which would be a good thing for everyone. But the other thing too is when you're looking at a house, I know a lot of times when you go in as a buyer, you kind of have like, oh my God, this is my dream house. I don't want anything to be wrong with it. But step back from that emotion and take a look at the actual condition. Put it on from the lens of I'm the person insuring this house and I need to make sure everything's buttoned up. Take a look at the roof. A lot of times you can tell it just by looking at the roof on the street. This roof has been hit hard. You can tell the angles and where trees were dumping onto this roof every day, or you can say this roof looks really good. If I was going to guess, I would say this roof is actually newer than it actually is. Those are things you can tell pretty easily as a homeowner, and just being cognizant of the fact that these things can come back to bite you. If I was buying a new property now, these are things I would look at very closely. And I would definitely recommend everyone to do their due diligence on their inspectors. And if they're not sure about inspectors too, what they can do is ask the inspector for some references before they hire them, and call some people and say, what kind of work do they do? I know that's a couple of extra steps, but there's really only so much you can do to prevent getting in a situation where a carrier is going to come out and say all these things need to be fixed or you're uninsurable. So having that trust and having the right inspector and doing as much of that as you can up front as a new homeowner is only going to help you in the long run.
Yep, for sure.
Maybe it means you walk away from a house you really like, but maybe the house you really like was going to end up being a money pit and putting you in a bad situation financially.
So let's talk solutions to these issues or lack thereof. So anytime we meet with a seller, let's say, one of the first questions is, all right, what can we do to deal with this? And, in our industry, there were things like escrow holdbacks where people could, literally cure some of these issues post-closing and then get with an insurance company and then take care of it within the 30 days of occupying the house, and then everything's good to go. What does that landscape look like now in 2023?
Well, the escrow holdbacks, there's been no changes as far as like a title company issue with that. But from an insurance standpoint, we used to be able to, hey, we're going to get this new house, and right when we move in, we're going to replace the roof, replace the plumbing, do all these things. And carriers would give you 30 days to do that, or they would not renew you for underwriting. Well, now carriers aren't taking that risk. They're not even giving you the 30 days because what's happening is they'll say they're going to get a new roof in 30 days. They'll buy the policy, close on the house, and immediately file a claim. So now these carriers want to see everything completely updated and fixed before they'll give you a policy. So there are situations where we can go to an excess market, get you something that maybe doesn't cover the roof on the house, but covers everything else. So the mortgage company is okay, and with the policy. And then after the fact, once it's fixed, you can go back into the private market and get a regular policy. The issue with that is a lot of these excess carriers are 25 or 40 or 50% minimum earn. And if you have them even one day during hurricane season, which runs from June 1st, I think, until sometime in October, a lot of times that minimum earn goes up to 75%. So just for example purposes, a citizen's policy may run $3,000 on a house. An excess policy on that same house may run $7,500 and not cover the roof. And if you're on the hook for it because you do it during hurricane season, where you have to pay 75% of that, even if you do an escrow holdback and replace the roof after closing, you've also just spent an extra $4,000 in insurance for something that doesn't cover your roof that you're going to want to keep for 3/4 of the year because you paid for it. So it's a lot harder than it used to be on fixing it post-closing. So my recommendation to every seller out there, if your roof is even questionable, you're either going to have to pay for it now or pay for it at closing because you're going to have to give a credit back anyway. It's going to make the selling of your home so much more difficult. The smart money is to just go ahead and replace the roof yourself. Then you sell your house with a brand new roof so you don't have a problem. You're not having to, and then also, by the way, when you're doing an escrow holdback for something on roofs, you're going to be at the buyer's discretion of how much that roof is actually going to cost. If you do it on your own, you can go out and get 5, 6, 10 quotes. Find the most reasonable quote. Make sure the roofing company is reputable. They put the roof on your home. Now you go to sell your house with a brand new roof. The one caveat to that is, unless you actually have legitimate damage that was covered by a covered peril or caused by a covered peril, don't file a claim because that could impact you selling your home. But if you go ahead and do the roof by yourself ahead of time, then any buyer that comes in, that is literally a non-issue. You don't have to talk about it, doesn't have to be discussed. It's a brand new roof that was just put on. You get to pick who does it. You get to pick the price that you pay for it. And a lot of these roofing companies will do financing. So if you're concerned about paying for it, finance the roof, and after closing, take that money that you were going to give back to the buyer anyway and give it to the roofing company. Now you're done. No headaches. Clean and easy. So if I was a realtor doing listings, that would be something that I would be recommending to these people.
Yep, for sure. So what do you say to, I mean, so many people they're running into this issue where they have to do something with the roof, and a lot of people will turn towards an insurance claim. What would you say to people that let's say 10 houses in the neighborhood got new roofs because of claims, and now they're thinking of selling? Odds are, if they got approved, they're going to think that the storm damage probably was relevant on their house. What do they need to know about if they go that route or want to go that route? What possible impacts could that have on them to get a claim on their house only to put a new roof on just to turn around and sell it?
Buyer's going to have issues getting insurance on that home. They're going to have issues getting insurance on any home in the future. With the new legislation that's passed, if the insurance company denies your claim, now you're in a situation where you have to replace the roof because you've reported that there's damage on your roof enough that you're trying to file a claim. And you'll have to replace that roof before your next renewal, or you'll get non-renewed. And if you, a lot of times as far as eligibility goes, companies that would maybe take your house won't if there's a claim on it. So the difference between a private market company taking your house and having to go to Citizens or an excess carrier would be the difference between $3,000 or $4,000 a year. Now, times that over a 4 or 5 year period, which is how long that claim would stay on your record, you paid for your roof anyway, and you just don't know. So you'd be better off doing it the right way, not having that claim on your record, keeping your insurance score as good as possible, because that insurance score not only affects your home, it affects your auto. If you have any commercial insurance, that insurance score follows you. Every claim you file, that's a knock on your insurance score. Kind of look at it like credit. That's like being delinquent on a bill. The more bills you're delinquent on, the harder it is to get credit than anyone else. Well, insurance is no different than. They have a system that they report to LexisNexis. Every time we run a policy, whether it's home, auto, or commercial, we have to run an insurance score, and that insurance score can have a very adverse effect on the premium. I mean, we have some that the house itself should be insured. It should cost $2,000. After a bad insurance score, that jumps to $6,500 because the insurance company knows this is going to be a problem. So if it's going to be a problem, we're going to charge you for the fact that it's going to be a problem. It's kind of like if somebody has a 500 credit score, they ask to borrow $20,000, you're going to jack that interest rate up because that's a high risk loan.
Yep.
So that's what they look at, and avoiding those claims. And the whole everyone in my neighborhood is getting it, so I should get it too. I mean, look, these roofers are just nonstop. There's a storm that hits your area, they have an app on their phone. One piece of hail falls, they draw a 3-mile radius around that. They know what day it's on. They knock on doors in that entire radius and say, I can get you a free roof because one piece of hail fell. Well, these roofs are designed to withstand hail. I mean, hail has happened here for years and years and years, and until the law that says if 25% of your roof is damaged, they have to replace the whole roof, which was passed in 2017. Until then, there was no roof claims. So the roof's integrity is still there, especially on the architectural shingles that have multiple layers. That can get hit with multiple hailstorms and still be okay. But the way hail works is if it hails a block away, that doesn't necessarily mean it actually hailed at your house. It's very spotty. And it also doesn't mean there's enough hail that caused your roof to be compromised. So that whole my neighbors did it, that all of that is coming to an end with the new legislation. It hasn't happened yet. And what I tell people is if you file a claim now on your roof that isn't really covered by, damaged by a covered barrel, it's just wear and tear and you need a new roof to sell your house or get insurance, there's a high likelihood that claim is going to be denied now. But everything we just talked about with the insurance score is still going to have a negative impact. So now you're truly running a risk of screwing your insurance score moving forward and having them not pay for it. And now you put yourself and the new home buyer in really bad situation.
Yeah,
So
it's a really great point of that home buyer. If they get impacted on that, that's another scenario where you won't know that until the 11th hour. And now you're in a bad spot. But then the worst part about that is, like, if it's going to impact that buyer, it's going to impact every other buyer too. Like, that could really have a very damaging
negative impact on you selling your house.
Yeah, like you may be stuck. That may just become a rental now.
So this is what I recommend to every one of our clients who calls us and says, there's door knockers in my neighborhood. I think I have damage on my house. Call an independent inspector who is not a roofer. The same person you will call to inspect your home before you buy it. So you know that they have the capability of determining condition of what things are, including the roof. Have them give you a report on just the roof. If that report says that it has been compromised by a covered period, when you go to file that claim, you can then say, on the advice of my agent, I went out and got an independent inspection by someone who's not a roofer, so they have no skin in the game or incentive to tell me to get a new roof. They said there's covered damage. Here's the report. The chances of that claim now being denied diminish drastically because you have taken an extra step on your own dime to get it inspected properly before
from an unbiased party.
Correct. Now, if you file a claim and then decide you want to withdraw it because you're wrong, that claim is still on your record. Once you file it, you cannot get it off you.
Nice.
So
you said it earlier. How long do they last, Mark?
So it's chargeable for 3 years, but carriers can do a 5-year look back, and look back can affect eligibility and discount. So technically, there's a 5-year charging window that they can charge on those claims. So if an independent inspector goes out there and says this is clear-cut damage, this is definitely caused by hail, here's your evidence, and you file that claim with that report, 99% that the insurance company is going to write you a check and you're going to get your roof and it's going to be no problem. However, if that inspector said, nothing's wrong with this roof, or this is clearly just wear and tear, nothing damaged this roof, don't file the claim because all you're doing is opening yourself up to a disaster. And you can find that out for the same $120 they come out for and do the roof inspections. And it's saved a lot of people from filing claims, and it's also helped a lot of people have zero issues when they file their claim. So it's definitely something I would recommend. And if you're going to a listing appointment and they're deciding whether or not they want to file a claim, have them get that inspection before they decide.
Yeah, that's something that we're strongly encouraging all of our agents and anybody that's maybe a client watching this, like getting, and I liked your advice, Mark, honestly, on getting even a whole home. I mean, from A to Z, because it's better now. The market was different a couple of years ago, both in insurance and real estate. So we were able to get away with a lot of this, but now these are going to be problems that are unavoidable. They quite literally unavoidable and could actually have a very lasting impact on the insurability of that property going forwards. And I think everybody needs to know this information in advance so that way they can take intelligent steps and not necessarily try to creatively skirt the process and only really permanently damage themselves.
Correct.
Yeah, I think getting,
one of the things I look at is the issues that come up on that new home inspection are coming up whether you like them or not. And if you have to have your house go pending, they get an inspection and come back to you with a laundry list of things, you're like, I'm not fixing them or whatever. Then you have to put your house live again. You can knock some money off because someone's going to say, well, there's a red flag. Why was that pending? Why did that fall through? You're going to ask the questions and you're going to have to come up with the answers. So if you're going to have to fix those problems anyway, why not get ahead of it so when you list it the first time, all of those issues are tied up. There is no problem. The sales cycle will be a lot easier for the seller and you won't get caught with anything at the 11th hour because all of those loose ends are tied up before you put the house in.
Yeah. And having to deal with those issues at the 11th hour is going to cost you exorbitantly more. A $15,000 roof just became a $30,000 roof. A $10,000 repair just became a $15,000. Like getting out in front of it allows you to control the cost and control everything. And on top of that, not only is it cheaper, but it's just going to be a smoother transaction. Well,
think about being the seller too and having these issues come up at the 11th hour. Now you got to pay more for them. On top of which, a lot of times the buyers they're in a 30-day rate lock. So if they have to extend that lock and rates go up, now they're looking for you to make up the difference for that because it's being extended because you got to fix things on your house.
Great point.
So as the seller, you're really in a position where you're up against the wall. And if rates go up while you're in that process, if that buyer walks, the next buyer's got a higher interest rate, chances are they're not going to pay as much for your house.
Yep. And on top of that, if that buyer walks, you now have to update all the disclosures, because once you know something to be true that could materially affect the value, now you have to update your disclosures anyway. And like Mark said, it's a great point. Now the rate just went up. Now the value of your house went down. So getting out in front of all this stuff, unfortunately, this is kind of the way it is. And this is kind of what I want to wrap this up with, Mark. And by the way, this has been really insightful and very helpful. Hopefully that both agents and clients got a lot out of this, and at least should not be surprised going forwards. What does the future look like? You've kind of touched on a little bit some of the legislation that's coming. Obviously, it's pardon my French, it freaking stinks right now. It's terrible. Is there relief on the horizon? What could some of the positive impacts be on this legislation, and what does everybody need to be watching out for?
Yeah, so I think the day before the last legislation changed in March, the attorneys filed 280,000 lawsuits. So it's going to take several years for all of that to get sifted through. But in the meantime, there's also a lot of attorneys that are fighting these actual legislative changes in court, saying that they're unconstitutional. If any of those lawsuits are successful in overturning these laws, we're going to be in a big mess. Assuming those hold up, I think in the next year or two, you're going to see a couple of things. You're going to see reinsurance carriers more willing to get back into Florida. You're going to see new companies open up with capacity because they're no longer going to be afraid of Florida, and they're not going to have a tail of litigation that's going to affect them for the next 5 years. You're going to see rates start to stabilize. I know everyone wants to see rates go down, but 4 years in a row, they're up 60, 80% every single year. So just getting to that stabilization point would be a huge benefit to know we've kind of plateaued at the top, and now we can start seeing that descent on the horizon. But really, once those laws stick, the attempt of getting them overturned in court goes away. You'll see new carriers enter the market, which will increase everyone's capacity. You'll see reinsurance companies willing to come back into the state, which will also help everyone's cost. So once these carriers have to spend less on the reinsurance, they can offer rates at a lower rate. And once we know that we're not going to have a continued tail of new claims or a new wave of something come through, I think you're going to start seeing rates actually go down. My guess is we're 3 or 4 years away from rates going down, but hopefully by next year, rates will stabilize.
Wow. I hope everyone caught that. So there's no immediate relief. So get out in front of all this, know what you're dealing with in advance. A lot of people may have to tap into their home's equity to address a lot of these issues. And honestly, some people just may not be buying or selling, and they should be okay with that, because making a mistake could have a very lasting impact on that home, your insurability, the home's insurability. And that's why I really wanted to talk to you, Mark, is to be able to share, this has gotten really serious. It's gotten very complex. It's gotten really serious. And to that point, real quick, how many and who? How many carriers are there that are viable left in the state of Florida?
We still have a lot. They're just not writing a ton of new business. We lost 14 over the last 4 years. We've had a couple new enter the market, and I think that'll continue to happen. There's a lot of money on the sidelines waiting to get into Florida. I mean, we're one of the fastest growing states in the country. People want to be here. There's a lot of money to be made in insurance in the state, but they don't want to deal with the litigation nightmare. They don't want to deal with the losing crisis. They want to get past it to where it used to be, where the only thing we really worry about is hurricanes. And, hurricanes are going to happen. Those are unavoidable. There's nothing we can do to prevent them. But if all of our insurance companies are healthy, they can handle it. And when I started in this industry in 2004, carriers used to tell me all the time, we love when a client has a claim because we're going to show them how good the claims process is, and they're never going to leave us. And that brand loyalty is completely out the window with what these attorneys and brokers have to convince clients with their home insurance. And, the last thing that I'll tell you on this is, if you have a private market insurance policy, even if your renewal is higher than you want it to be or went up a bunch, I would highly recommend considering keeping that policy as opposed to going to an excess carrier or Citizens. The problem with Citizens is, on top of everything else we just mentioned, they do takeouts all the time. And what that means is a new company will come into the market, and in order for them to write policies here, they have to take a chunk of the Citizens business. So So when it goes to a new carrier, so you could be with Citizens this year, next year, and the following year get a letter saying you're no longer with Citizens, you're with company X, Y, or Z because they took out a chunk of policies. Well, at that next renewal, they can then rate it however they want to rate it. And whatever money you think you're saving between assessments that could happen with Citizens or going to a takeout company and having problems, if you're with a private company and they're offering you renewal, I would highly recommend staying with that company if you can, because it's going to be a lot easier for you moving forward. As far as the takeouts go too, a lot of times you don't have a choice as the homeowner, and you go to this new carrier, and at renewal, everything in their language is going to be what your new policy is, and whatever rate they want to have it at is what your rate's going to be. So a lot of these companies are going to a 5% hurricane deductible at renewal. They won't give you an option for a lower one. A lot of these companies are going to 10,000 limited water. So if you're with Citizens and you have a policy that has full water and 2% hurricane deductible, a new carrier takes you out and maybe you don't pay attention at that first renewal, they can put in their language. They can change your policy unbeknownst to you unless you read your entire 70-page policy that's sent to you in the mail. So, big thing I tell people is, rates are going to stink right now. If you're getting renewed by your current carrier, I'd seriously consider staying if it's something that's not just crazy.
Out of curiosity, when you guys submit like a new policy, how many are coming back? Like how many quotes are you seeing on average?
So we have a home rating system and we put it in, and we have like 40 carriers that we write through that are in there. And on each given home, it depends. If it's new construction and it's not in Solo County, we'll probably get 8 to 10 options. If it's in Solo County, we're going to get maybe 2 or 3. If it's an older home outside of Solo, maybe we get 3 or 4 options. If it's an older home in Solo, maybe we get 1 option. Otherwise, it's Citizens.
Wow.
So the problem is in Solo County, there's so many old properties that so many of them, we get it, we look at it like this is going to be Citizens, like almost 100% guaranteed.
So to clarify for those that may be watching this later, whatever, that's Orange Lake, Seminole, Volusia. That's like a lot of the middle chunk of the state, right? So if you've got an older home there and you've got some deficiencies, the odds of getting 1 or just having to go to Citizens are really, really high.
Staggeringly high.
Oh man.
So and if you had mentioned like what we can expect with these legislative changes, people are looking at it from the standpoint of, we need rate relief. If they didn't pass these legislative measures now, it would probably only be a year or 2 before we didn't have an insurance market left in the state.
Wow.
And there was a really good YouTube video put out by a company called MAPFRE, MAPFRE, a couple of years ago. I encourage anyone who's watching this to go YouTube that. And the video is what an economy looks like without insurance. And basically, you can't have an economy without insurance because nobody's going to build, nobody's going to buy a home, you're not going to be able to get loans. It'll basically just put the economy in the toilet and it'll keep it there until you have an insurance market. And without these measures being taken, we 100% would be facing a collapse of the entire industry.
Wow.
We were on the verge of a collapse of the entire industry.
And unfortunately, being in the state of Florida, we're the tip of the spear as far as that industry is concerned. Like the domino, just because of the litigation and the fraud and everything else, like it'll be Florida.
It'll be Florida. And the crazy part is we never had an insurance crisis. We always had a litigation crisis. And that hasn't changed. We have more attorneys in Florida than any other state in the country, and more of them are attorneys that sue insurance companies and any other type of attorneys. And a lot of them in the next couple of years are going to be looking for things to people to sue. And, as long as these laws hold and they can no longer go after the low-hanging fruit of hitting the homeowners insurance companies, we should be okay. But if they find another loophole in, we're only one loophole away from being right back where we were. So it's tough. And from our business standpoint, our model of business used to be, you write a piece of business, it renews for 10 years until that person sells a house, and you don't have to touch it unless they have some minor changes, good to go. The last 5 years, we're basically rewriting 85% of our homes every year, probably 75% of our autos every year, which is the exact opposite reason why anyone would ever get into insurance.
Wow. Man, that's disheartening to hear. But unfortunately, the the system is pushing people to it. And that's why I'm hoping that, man, I hope we get, a little bit more stability and rates start to ease off so we get more people to enter the marketplace, because we do not need everyone going to Citizens, and that's just bad for so many reasons. So,
and I think a lot of people are finally starting to realize this goes beyond insurance. Like, it's affecting real estate. It's affecting the way you buy and sell homes.
Yeah.
A couple of years ago, it was just an insurance problem. Now it's affecting loans. Like,
yeah,
you can't get a mortgage on the property. It's affecting, how many people have had to get force-placed insurance because they don't qualify and they're not willing to fix their house. Well, you have a loan that says they can force-place you, so now they're getting force-placed insurance. And it's going to have a spiraling effect on every other part of the economy and it will continue to do so until it's fixed. And I think these legislative measures will work as long as they hold up. I think in 3 or 4 years, we'll be back to a healthy market. Now, prices will never be as low as they used to be. That's just a far-fetched dream. But if we could stabilize rates and then maybe have a 15-20% reduction in rates, and more importantly, have an opening of capacity, so some of these underwriting issues aren't issues anymore, that's really when we're going to be back to a healthy market, and you won't have to worry about insurance when you want to buy or sell a house anymore. You'll be able to just handle the actual real estate aspect of it.
Yep. Well, Marc, thank you so much for your time, man. This was beyond insightful. Unfortunately, the news isn't exactly great, but better to know it, better to understand it and get out in front of these issues than to get caught off guard and potentially even make a dumb decision not knowing out of ignorance and creating a lasting problem for yourself. So really appreciate it, man. If any changes come up, we'll definitely love to be able to pick your brain again on it. But yeah, man, thanks so much.
If any of your clients watching have any questions, feel free to reach out to me anytime. I'll be happy to help them.
Yeah, the contact information for Marc is on the screen. I can definitely speak to not just Marc, but the entire family. Not just a great company, but first-class people too. So anybody that's got questions on it, that's the big thing too right now. Man, work with a professional real estate agent, hire a reputable insurance company, and hire a professional inspector, people that are going to not tell you what you want to hear, tell you what you need to know. So that way you can make an intelligent decision, because otherwise you could just really, really find yourself in a bad place. So. Yeah,
and there's a lot of bad agents out there, real estate and insurance.
Yeah.
And there's a lot of people that'll, say whatever they need to get a deal. That's not how we work. I know that's not how you work. And
yep.
By choosing to use the right people will make your life a lot easier.
Yeah, unfortunately, it's harder, and the harder it gets, the more of a professional you need to navigate those waters. And that's it. We're going to be in turbulent waters for the next several years. Real estate's in the same boat as insurance. We're going to be in turbulent waters for several years. And it's like, look, it's not changing. You're not avoiding these issues. Just know what you need to know, hire the right people, and you'll be fine. So, Marc, thanks again for your time.
Of course.
Fantastic.
Thank you for having me.
You're the man.
Talk to you soon.
Thanks, everybody.
You ain't seen nothing like this.